Indices rebound sharply from yesterday's losses. The Nifty is above the 24,200 mark. The mid-caps rally with the index up nearly 2%.
Realty stocks surge as the Finance Ministry is likely to review the new LTCG regime for Realty. Sources tell CNBC-TV18 that the government prefers grandfathering till July 2024 as relief to counter the removal of indexation. The final decision is yet to be taken, and the FM is likely to reply to the finance bill tomorrow or today.
Well, a bunch of stocks on our radar. Marico is down nearly 4% despite a good set of numbers and good commentary because the political turmoil in Bangladesh has affected sentiment. Remember, 44% of the company's international sales, which is about 25% of their overall sales, comes in from the neighboring country, making its exposure to about 11 to 12% in Bangladesh.
Indian garment makers Gokuldas and Kitex, they surge as the companies become beneficiaries of the disruptions in Bangladesh, as global companies may look towards Bangladesh +1 supply chain.
V-Mart Retail zooms nearly 8% as the company's reported strong internals in the first quarter. The revenues climbed 16%. EBITDA margin improves on the back of 11% same-store sales growth.
Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangala Malu. Well, the markets have opened up well in the green. The problem is we're not able to sustain at higher levels. We're still up close to around 160 points on the Nifty. The Nifty Bank, though, that's almost moved into the red, and that's the underperforming index in today's trade. Otherwise, the breadth of the market is good. So good to see some green after the clobbering that we saw in yesterday's trading session. Mangala.
Absolutely, Nigel. You know, when the market opened with a gap up, the first instinct would have actually been to book profits, etc. Yeah. Now the dip has come by. The question is whether there would be a second rally from the lows or not. And the question to that would be answered by the way the Nifty Bank moves. Like you pointed out, you know, it's almost moved into the red as we speak, and that's led lower by HDFC Bank, which is now below the 50-day moving averages as well. So now below most of the important moving averages for that stock. And the second half, we'll have this one also in focus on account of the financial services expiry. What's also interesting is that the India VIX, which has seen a big cool off from yesterday, has actually moved higher from the lows. It's still down about 10%, no problems. But look at it, from the lows of today, it's up almost 22 odd percent. And this hour itself, from the start of 10, it's up around 5%. So that's something we'll keep an eye out on. In this wobbly market, what should you do? We'll get you a few ideas of profit coming in from our colleagues at Moneycontrol Pro. And today we have Nitin Agarwal joining in with the stock.
So the company that I've chosen for today is SJS Enterprises, which is an auto ancillary company. First, let me touch upon its Q1 number. The company reported a 60.9% YY growth on its net revenue, driven by 104% growth in the passenger vehicle segment and 134% growth in the consumer durable segment. And company continued to maintain its EBITDA margin about 25%, which is a significant feat for any auto ancillary company. Now, moving on to the key driver for the company going forward, the company continues to focus on premium products, catering to the SUVs, premium bike, etc. Now, these are high value, high margin products, and has been able to improve the company's operating profitability due to this. Apart from that, the company has been focusing on export market. Its total share from the export is around 7.5%, which is steady. And with the improvement in the export market, the company sees 6 strong opportunities in those areas as well. Apart from that, in the quarter gone by, the company onboarded Dixon Technologies as its client, which is one of the largest and well-known EMS manufacturers. And management sees a significant opportunity coming from this particular collaboration. In terms of valuation, the company currently trades at around 22.8 times FY26 projected earnings, which we believe is reasonable given the company's growth potential.
All right, that's an idea coming in from our colleagues at Moneycontrol Pro. But let's talk about the earnings radar. Century Plyboards, that's the stock on our radar, reported its first quarter numbers. Of course, there were challenges with labor shortage, heat wave, etc. Higher cost due to commissioning of a couple of their new plants. The stock is holding up mildly in the green because despite all of this, you know, the revenues of the company grew by about 13 odd percent. The EBITDA was down 17%, and because of higher depreciation and finance costs, the net profit was down 61% as well. The company hasn't uploaded its presentation on the exchanges. Yes, the conference call tomorrow at 12 p.m. as well. So to that extent, it makes this conversation with Keshav extremely important. So let's get done with the basics first, Keshav. You know, the overall revenue growth this time around was 13%, and it was a quarter marked by a lot of challenges, etc. as well. So if you could break up, you know, what the volume growth across all your segments were, and what was the realization growth across, you know, plywood, laminates, MDF, and particle board. If you could give us these basic details first.
Good morning. Thank you so much for having me on the show. I think, if you look at it from the point of view of overall quarter, we have done a very good job in a very subdued demand environment. In the plywood segment, we would have close to 15% revenue growth YOY after quite some time. In MDF, despite a substantial dip in realizations, we have a 25% value growth and plus more than 40% volume growth. In laminates, we have been flattish, and particle board, we have been flattish. But we are hopeful that in laminates, second half of the year, we'll post a strong growth once the Andhra unit starts scaling up. It is taking a little longer to scale up. The particle board new unit is likely to come on board by the end of this current financial year, and we'll see a strong growth in particle board from that point onwards. So I think overall, we have done a fairly decent job in, like you said, a very challenging quarter.
Could you give us the volume and realization of each of the segments clearly? What was it in the first quarter for plywood, MDF, laminates, and particle board?
For plywood, year on year, the realization was slightly up, but it has been mainly driven by volumes. For laminates, both have been more or less flattish. Whereas for MDF, there is a delta because there has been a reduction in margins. As you know, we haven't posted the investor presentation yet, so I can't share too much of the detail at this point in time. But MDF has been driven by a substantial volume growth that has offset a drop in realizations because of competitive pressures. So a 25% value growth would have been on account of a 40% plus volume growth.
Hi Keshav, good morning. Nigel on this side, good to see you. Before we get back to your business, wanted to ask you, there's some unrest in Bangladesh. Any impact on your business or on the industry because of what's going on there?
Good morning. I don't think Bangladesh for us is a very small market. We export some laminates to it, but it is inconsequential in the overall scheme of things. So I don't think there's going to be any substantial impact on account of the disruption in Bangladesh on our business.
Okay, let's got that out of the way then. So let's focus on margins. Margins have skimmed down a little bit in the past quarter. And as we know, timber prices have surged in the last 12 months or so. What's the outlook on margins from here on? Because you're sounding optimistic on volume growth, though on realizations, it'll be, I think, a little bit difficult to push through price increases. What's the outlook on margins?
I think if we break this into different segments, in plywood, we have taken a price increase in June itself, and we're planning to take a further price increase in this quarter. In laminates, we have taken a price increase in the current quarter. In MDF, yes, the competitive pressure is there, but I think it has bottomed out. From here, margins should improve because realizations are likely to improve, and our Andhra unit is going to scale up. So as you know, the first quarter in any new unit is challenging. There are a lot of teething issues, but thankfully, those are behind us, and we are seeing Andhra ramping up quite rapidly. In laminates, we have been able to deliver on margins, but we have not been able to deliver on volumes. In H2 of the current year, we are confident that we'll deliver a very strong and robust growth in volumes alongside an increase in margins. So I think overall, we are well positioned. And as you see, our guidance for the year has been the margin guidance. We have pretty much been on track across all segments, whether it is plywood, laminate, MDF, or particle board. If you negate the impact of Andhra, in MDF, we are at 14% EBITDA margins, which is very close to the 15% guidance that we had given.
All right. Just to confirm this guidance, because you haven't uploaded the presentation, the conference call hasn't happened yet. If you could confirm this guidance for us, or is there likely to be a change? Earlier, you had said revenue growth for this year would be upwards of 15%. Plywood over 10% with margins of 12 to 14%, laminate over 20% with margins between 10 to 12%, and MDF over 40% with margins of 15%. Is there any likely change to this guidance, or you hold on to this?
No, we will hold on to this guidance, and we are fairly confident that we'll be achieving the same.
All right. And what about the capacity utilization? I mean, you did speak about a lot of capacities coming on board in the last couple of quarters, a few coming on board in this year itself. Where do you see this year at the end in terms of capacity utilization? You had a glide path of almost 80-85% over the next couple of years. That's 26-27. What we need to know about is 25.
I think, by the exit of this year, by Q4, we'll be at more than 50% capacity utilization in both the new MDF and the new laminate capacities.
All right. And 6,500 crores by FY27 at peak utilization on target, right?
Yes, very much.
Margins at that time?
We'll give you guidance as the year progresses.
All right, we take that point. Always a pleasure speaking with you. The street wanted to know a lot more about the business this time around, but you were limited by not having uploaded your presentation. But we get a sense that there has been some realization impact on MDF, and you hold on to your guidance.
Okay, all right, Keshav, thanks a lot for that. By the way, we need to get our eyes back onto the market. The Nifty Bank, the intraday chart should come up for you after opening up at the gain of around 500 points. It's now down close to around 70 points. So that intraday chart will tell you the picture, why the Nifty has come off the high point of the day, because the Nifty Bank has breached that 50,000 mark yet again. I think the next support level is at around 49,500. So we'll have to keep a very, very close eye on that mark. Let's slip into a short break. Come back. We'll focus on the new listing from the pharma space. Don't go anywhere. Welcome back. Well, let's focus on the new listing. Then, we just had one that took place earlier today. Akums is the new kid on the block. Well, they've listed with a gain of close to around 6%, and now the stock is up close to around 12%. Well, to understand how the business is shaping up, we have with us Mr. Sandeep Jain, who joins us to help us out with the way forward. Hi, Mr. Jain. First, good morning, and thanks a lot for speaking to us here on CNBC-TV18. Congratulations on a solid listing. Market conditions are a little bit feeble, but your stock is doing quite well. So let's focus on a couple of numbers then. For this year, what kind of a revenue growth are you looking at? And if you could split it up for us, how much will branded generics contribute as a percentage of your mix? And exports as well, I think they're in mid-teens. How much will that contribute as a percentage of your mix? Please go ahead.
See, we have been always achieving around 15% CAGR, and I hope that we are working on the same, and we will be able to maintain the same pace. As far as our branded marketing is concerned, we are around 10%, and this API business is somewhat very, low, around 1.5%. Around 2% we can say, and we are working on the same. And as we are having two European GMP plants which have been GMP approved very recently, European GMP, and we hope that we will be in a position to get good business from those two plants as well. And we are having more than 500 dossiers already approved in 60 countries, more than 60 countries, and we are working on the same to grab more business from these countries as well.
So exports go up by how much? I think they were 17% of the mix, right? Where do you see it headed?
Yes. You're talking about the marketing business. That is divided into three segments. Around 78% of the business comes from CDMO only. Over here into CDMO, that is contract development and manufacturing organization. We manufacture for almost all of the big companies of the country and holding around 10% of the total domestic requirements. And as far as CDMO space is concerned, we are having the total share of 30% of the total CDMO space of the country. And we are 25th largest in the country, in the world, and first largest in the country. And the remaining business is around 20%. Say 17% is marketing, and out of that marketing, 10% is from branded marketing, and around 4% is from exports.
All right, take that point. If you look at the valuations of the company at which you have offered, it's been much lower, but that also coincides with much lower margins as compared to peers. So if I look at, say, someone like a Suven or Divi's margins, they are close to 30, 40 odd %. You are about 12%. Yes, there was a one-off in FY24, but on a sustainable basis, what is the kind of margin that you can deliver?
See, we are into research and development. Around 400 scientists are working day and night to develop more and new products. We are having more than, say, 200 different kind of niche formulations which have been introduced to the country for the very first time or second time in the world, like that. And we are working for new molecules which always give better margins to us. As far as our current business is concerned, it is in a very sustainable profit margins, and we don't intend to increase so much of margins into that. But
How much?
whenever
Because
there will be a new product or new market,
no, because as we see, on the screen as well, the information tells you that Suven Pharma does close to around 20%, 42% margins. You have Gland, which is around 25%. Divi is around 31%. Innova CapTab is another 15%. So amidst all of that, you are at just about 12%. So you are looking to improve them. To what extent can you improve it? Can it go to 20, 25%?
See, we don't intend to go for those 20% margins. We intend to maintain the same margins. And as far as Divis or Seven is concerned, they are into different kind of the products. Divis is mostly into APIs, and we are into formulation, and that's true for the specific domestic Indian market, India-focused domestic CDMO player. We are working for say out of top 30, we are working for 26. May it be Indian companies, may it be multinational companies. Our focus is CDMO, and that is means you cannot compare us from Suven or Divis.
Okay, all right. Mr. Jain, could you help us out with as a percentage of a consolidated mix, how much is exports as of the last year?
Yeah, 4% is exports.
4% is exports. And where do you see this number headed?
Yeah, it is going to be very high, of course. But
so
in
the next 3 years, should it be in double digits?
Yeah, definitely.
In the next 3 years, it will be double digits. Got it. What about the utilization levels of your, in terms of capacity utilization level? We understand it was less than 50% as of the last year. So could you help us out with when do you see it move up? Point number one. And since you've incurred some capex, at optimal levels, what could your revenue potential be of the company?
See, we are working at around 40%, 42% of the total capacities, as we are holding around 18,000 SKUs, which is the largest in the world, and 4,000 different formulations, which is again the largest in the country. And we are serving for around 1,500 different clients. That's why, because of the complexity and because of the so many changeovers, etc., we are working for around 40% of the total capacities utilization, and we can always scale up it at 60%. And we have in the past as well, we have scaled up for 60%. So in almost all of the production lines. But whenever we go for more than 40-45%, we always make sure that we will have to install more plants and more capacity has to be built, so that the capacity should be spare enough to take care of the ongoing need of the country, as well as the global needs.
Right. Final question before we let you go, sir. You, at the start of the conversation, said that you have 2 EU GMP approved plants. I just wanted to know, of the total number of plants that you have, how many are EU GMP approved, how many of them are US FDA approved, and with these approvals, what is the increase in revenue likely to be?
See, we don't have any US plants right now with us, and 2 plants are European GMP, because 2 plants are sufficient enough to go into those markets. One is for oral doses and one is for injectables. Other plants have not been applied for European GMP because those are not required. As far as, say, volume is concerned or revenue is concerned, of course it is going to help us. But we cannot give you any futuristic numbers.
All right, we take that point. But this is a recent development, so this is something that we'll keep an eye out on. Increased revenues coming in from Europe, and if at all at some point you go, you look at US as well, you will obviously have to get some of your plants approved by the US FDA. Congratulations on a listing, a strong listing, up 13% for your stock right now. The street will be eyeing growth as you promised. 15% CAGR is what you've done, and that's something that you intend to maintain. With that, we'll take a short break, come back, focus on the markets itself, and talk a lot about specific stocks. Stay tuned.
Welcome back. Well, that intraday dip has got bought into, and that's why the Nifty is back up close to around 200 points odd. The breadth of the market is still in favor of the number of stocks that are advancing, but earlier today, we had only 150 stocks that were declining. That number has perked up a little bit to around 600 stocks. But that's it from Mangalam and myself. Yeah, Mangalam.
Just as we spoke, the Nifty Bank has
moved into the green.
So we're happy. All 4, when we started, were in the green. There was a brief dip, and now the Nifty Banks moved back into the green. So we leave you at, at the hands of the team of Trading Guard with all indices in the green. Thank you for watching.